Okay. So the idea is to start from scratch, complete zero. And this would mean that we would begin with the basics. We would run through the basics of everything and make it all from zero. Okay. So let's see. Okay, basic market structure principles. All right, so let's take a clean empty chart. Let's clean all this. All right. Away. All right. So market structure, basic stuff. Number one thing to follow. High, higher lows means trending market. Lower highs, lower lows means trending market to downside. Then we have ranging markets. What is in between these two conditions? The level of retracement from every move. All right, so if it's a strong trending market or if it's a weak trending market or ranging trending market. Okay, so the level of retracement on every move will determine also the likelihood of making the next leg down. So let's go through some examples. Here, for example, this might be a ranging market. Okay. This is a trending market. But inside here, we can see that from here to here, we had a movement that was following a bigger trend. Okay. And from here, we can see like the level of retracement was quite deep. Eyeballing this above the 618, I would say 7.5 or even beyond. And the external push through the low was also very weak. Here, for example, we had a strong push with a weak retracement, maybe to the 38.2, and the push to the upside in comparison. Okay, well, we can also count this actually, was much bigger. Or let's see, this one here might be more interesting to look at. When we have a strong push and a slow retracement or a smaller retracement, then we can expect a stronger push to come through. again here, from here to here, not even to the 0.5, strong push to the upside. Normally you would count an extension. Okay, so well, this is the start of the trend, so should not take into the consideration. Let's take this for example. So this push into here. Okay, I can see the retracement was into the 618, and the extension one should target is the minus 618. Okay, let's see other examples like this one for example. So it went to the 7.5, 786 actually, and it went into the minus 272. So you can see like deeper retracement, smaller push. Let's see another example. Well, from this one to this one here, doesn't really apply. It's reached almost dot one. Let's see, go to logarithmic. Okay. Let's see here. $618. The minus 618 was here, minus 1, minus 1.618, and then big drop. Of course, this is not a hard rule, but it's a guidance, you know, on how you could make distinctions and target placement. Okay, so when we go into the smallest details on intraday price action, for example, we can see that we have a trend in the day, during the day, and then a reversal, okay, and a trend shift. This is interesting. This is today's price action. So what we can see is that price broke through a low that was made to push to a new high with an impulse candle that closed way below the low. So if it was just for this candle, it is a weak it should be classed as a weak attempt to break the lows, because it closed basically at the low. Okay, so this candle actually was the momentum candle, and you can see like the next candle did the retest for a drop to the downside. Now here we can now expect a continuation on the trend and a trend reversal, counting this trend here. Now it is interesting also this example, because as the push through this low was very large, basically double the range high length, okay, you can see also the retracement was not reaching the prior resistance, and it basically stopped halfway there for another drop. Of course, this is a way to understand market structure. It is not the complete way of trading, but market structure is the first and most important guidance on your trading, and it should be used to class the on how to deal with the market environment that you're trading. You should always align with the higher time frame market structure. Like for example, when you're in, let's take this trend here. Okay, when you're trending like this on the daily time frame, and we zoom in and we go into the hourly time frame. Okay, this is the section that we were looking at. So this area might cause you to believe that, oh, this is a shorting opportunity and we should keep dropping, because you can see there's a big drop, as we were talking about, breaking a low. Actually, the low that made this high was this low, so we should, for a proper trend reversal, we should be targeting or looking at this low to be broken impulsively, which you can see it didn't, because this low here did not break it impulsively. But anyways, let's imagine that this was the high. So this candle here broke the low with an impulsive candle, and from here one could say, okay, so this is a proper trend reversal here, then I should short, targeting new lows and beyond. But in this case, you would be trading against the bigger time frame trend, and that is not what you want to do. You want to align with the trend, especially if the trend is strong as it was on gold. All right. Yes, this is market structure 101. Very easy, but very misunderstood and not used properly, in my opinion. It really could guide you making the right decisions. Like for example, here we had the same thing. Okay, new high, broke of the low, impulsive break of the low. Then we saw a consolidation, not taking previous highs. Again here, another new low, breaking through these lows, less impulsively, but nevertheless the leg down was quite large. And then we see the first sign of strength, which is price made a high after bouncing from this low, a higher low, and a higher high. This is interesting because now you can see like the market structure is trying to shift, although as we were saying before, the retracement of this move was quite deep. Okay, surely through the 786. Yeah, so you can see that the push through the high was very weak, and what we did, we traded a back through these lows, to these lows, but not through. And this is another confirmation that this might come. Yeah, of course we don't know this, and we could simply do this at the time, but when you're back trading here, or maybe even pushing with a strong move above these highs, holding, then you must switch bullish, at least locally. Okay, even reclaiming this level here with a strong green candle and a very shallow retracement and retest for another push. Yes, so here we came down for the retest, and and therefore now it's time of waiting, because it's not definitely not clear what gold will do. But if we're following the big trend, one should expect higher.